The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday. And of course, this is the beginning of the week, so we'll take just a moment to look at all the different indices. Let me show you the 10-minute E-mini right now. It tried to rally. It went from a low at about 4 o'clock this morning, 3:40 this morning, 2368.75 after last night, pulling back very sharply immediately. And it had a nice bounce. It went to 2380.75, made the arch formation. Remember, we're always looking at these arch formations. If it takes out the left side low, it says it can bounce, but you need to get a very strong technical picture with the stochastic and MACD to break above the previous arch high, which it did. And then it took time, but not so much price, started moving down, came back down. It went to a leg. Now it's in leg F. My thinking here is that there's going to be another rally attempt, another bounce. The Dow is way better than the S&P. So the futures are down 1225, and there's that 2370 is that red line there, the moving average, and the 2370.87. So I'm looking at this and I'm suggesting to you that if there is a bounce, it doesn't mean anything unless it takes out 374 resistance, and by about 1 o'clock to 2 o'clock this afternoon, you can actually see 2376s, somewhere around there. Then I'd say, okay. But in the meantime, back at the range, I think we're going to be making lower lows and lower highs for the near term going into at least Wednesday. So that's my outlook. Now let's go to the nitty-gritties, and then we can take calls. The E-mini peak F in the Chapman wave, peak D in the Chapman wave, E-mini daily chart. The MACD is now finally turning down. Stochastics at 82%, still pretty good. On balance, volume pulling back. My thinking here, we've got a Chapman wave 5, and there should be some kind of a consolidation, taking the E-mini over the period of a week towards a 2342, 2333 area. We'll see what happens. Strong resistance at 2382. All right. And then the weekly chart will make a peak D if there's no new high above 2,401, round number high that was made 4 days ago. Let's go to the other indices. Here we go. The Dow. Same thing. Dow's down 80 at 20,925. Really, what's important about this, and I'm going to go to calls in a moment. Tim, hold on. Just the Dow is once it says the same thing. You see that doji candle closing below it today suggests that there could be a test of the 20,889 period exponential moving average before a bounce back to the candle open and close, which is at about 21. Let's call it 21,010. And then I think we come back down. And the pattern that I was really looking at, maybe we'll go into it, is in my Chapman Wave 5 to the downside. I sent this out to my subscribers over the week with this thing this morning, or anyway, with our weekend charts, that I'm thinking lower lows and lower highs, at least for the short term. Nothing too serious at this point. So let's get back down nitty-gritties just to say the S&P, let me run the numbers down. SPX is down 13, a lot more than the Dow at 2369. It is under the 9-period moving average, which seems to confirm for me that we are about to make a short-term top. We do have a sell mode in the Dow and S&P 120-minute charts, and so far it's going to be a leg D, maybe a peak D in the weekly chart. Monthly charts are still fantastic at this point. QQQ series is also down. It's at 130.33, down 69 cents. I don't think we're going to go above 131.68 this week. I think that's going to be a tough barrier. Let me go to the to gold. Gold right now is up 2 at 12.28. I think it's going to be testing 12.20s, and then we can see whether it goes to the 12.12 area. But my thinking is that gold is just taking a well-deserved break after a very big move up. This is months and months it's been going up in the weekly chart. It just needs a bit of a breather, but it could be a fear factor. What was mentioned, a good mention here was, let's see, Ketra said, Fed raised metals down. The Fed raise could mean that the metals is more costly to hold gold. Good point, very good point. Okay, and silver at this particular point is Up 10 cents at 17.80. It's the same thing. I think silver's made a peak D with a doji high, candle high back on the 27th. I think it's pulling back. 17.59 will be key support, and it's at 17.83 right now. I think it's going to go to the low 17, between 17.40 to 17.20 over the coming this week, and then we're going to see what happens. Let's go to crude oil. Crude oil right now is down 12 cents. Yeah, it's just stuck in a range. I think crude oil is stuck in a range. And at this point, I must say, just for another day or two, watching T-bond, the T-bond Treasury, T-bond TLT iShares 20-year T-bond fund very closely, because if it starts to close under 118 is really key support. 116.80 would be the next move, and that means that yields are going higher. And that's what I think is going to spook the market a little bit. So I'd like right now to go to Tim in Denver. Tim, how are you? Not on the phone. Tim in Denver, not on the phone, wants to know about the IBB. IBB is down 3.63, down 1.2% at 298. I really considered whether or not we wanted to start a short position in this because it is a peak D. Let me do this. I need to just go to, you see the 120-minute chart made a peak D with the daily peak D? And that's suggesting to me that the biotech iShares, the NASDAQ biotech ETF, is going to have some difficulty. But I did not want to go to the short side for three reasons. The first is I keep talking about this rotation. When one sector is weak, this market has always found some kind of solace in fund managers buying the weaker sector when the strongest sector is having a bit of a pullback. And when the strong sector starts to rally, the weaker sector seems to pull back. But what's happened in the IBB, it's gone a little higher than I expected. I wasn't sure it would go to a leg C in the monthly chart. I thought we would stall underneath 298, and we actually went to 304, I believe, 303.74. And that said to me, hey, hold off, because this could still be a sector that is in favor with fund managers who used to buy it every day, and every day made a fortune until it started its descent. And that big descent has been a big problem for many of these people. Some just shied away. I think they're kind of coming back saying, you know what, I think the IBB is going to be, I don't think Trump's going to do anything right now. It's going to take time. Why not buy the sector? And that's the reason why I think there are other sectors that I think are working a little bit better. So let me just stipulate, if the IBB, if you want to, it would have been better right at the opening. I should have seen that right away. Because at 301.50, I would have said put a 1 penny stop at the high of 303.74, 303.75, and you're out. It's not a big deal now. It's 7 points, though, instead of just 2. So 7 points to me says you can have a much smaller risk if you really want to do that. But, Tim, I'm going to suggest let's hold off, and I'll tell you why. If the IBB does take out 294 support, any bounce after that could be shorted, because then that's saying to me, finally the technicals are going to confirm some kind of a pullback. At this point, they're holding well. I'm not going to, I don't want to fight them. I don't want to presuppose something that might happen when the indicators are not there to confirm what I'm thinking. So hold off, put me back. Down 76, S&P's down 12.5. Basil Chapman, Tiger Technicians Hour. We want to talk about GE and some of the financials. We'll be right back.
If you're looking to unearth a new financial resource and diversify your financial portfolio, consider the new Market-Safe Core Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 4 equally weighted commodities: gold, copper, WTI oil, and sugar, in one powerful CD. With no pricing caps, you can potentially earn an unlimited upside payment at maturity if the commodities increase in value across semi-annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There's no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. With certain commodities on the rebound, now is the time to take advantage. The March 23rd funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once more, that's 1-855-750-4051 or visit everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So there were some questions in the Den about the E-mini 120-minute chart. Yeah, we made that Chapman Wave 5 top at peak G right there. That was an after the fact. We were really good on the other ones. This one I did after the fact, calling it a 5 because it was really a G that we were looking at, the 2401 round number high. I'm kind of accept because I actually shorted it 2399, 2 points of the exact top, then got out a little early. And then got so busy, I just never got a chance to get back in there. But right, this is a G/C at this particular point. That's the count. So a brand new C if you're going to the downside. But I like to keep the extension down because the MACD is still very poor. The histogram is still minus 0.52. And the stochastic never made a new high on that bounce. So it's saying something really important has to happen to break to the upside. But this is where there could be a bounce. I've got the arch formation already drawn and the channel declining dash channel. All right. So those are those people that are using Chapman Wave methodology. Just want to confirm what most of us are looking at. Paul says QQQ. We were looking at, yeah, I think that's right. So the QQQ, Paul said, and this is a good observation. He said the MACD of the QQQ chart is now signaling a sell. Could you address this on the show today? I'm also concerned on the effect of ETFs on big corrections. These ETFs are relatively new and really haven't been tested in a down market. Yeah, they're really not that new. We've had the diamonds for decades. We've had the SPY just forever. But Paul, I'm with you. I'm getting really concerned. So much money is flowing out of the funds. And people are saying, and they're correct in saying, why would I be paying a fund manager to do what's mimicking in fact, they're not even mimicking what's the Dow and the S&P are doing. Let's just buy the SPY or the diamonds. For crying out loud, why should I even bother? I mean, just the same way as we have the DOD ETF on the Dow. Oh, no, stop moving on. Have a rest, please. You make me nervous. Right. What I'm looking at is the QQQ series weekly chart has a flat stochastic. Let's do this today. You know what? I've had a number of questions and all that. My thinking is this, and it's really important. I want to show you why. I'm trying to be nimble on the short side, We've identified a sector that I think is going to be pulling back. I've identified that sector as also being the leading sector on the way up. So perhaps on the way down, it's going to have give us the choppiness we're expecting. That's number one. Number two is within the context of the markets, the QQQ series has some very important. It has the XLK, which is a lot of the tech stocks. It has the semiconductor stocks. It just has very important components. But at the same time, when I'm looking at the QQQ, you see the way this histogram, let me see if I can get it even bigger. Oh, I keep doing the wrong one. Oh, this is the monthly one. The MACD is still climbing. It's only about the fourth trading day of the month. So it's still climbing. It's gone above the trendline resistance, but the stochastics at 94% in a monthly chart. That is really good. And in the weekly chart, we're at 97% in the MACD, in the stochastic. And the MACD is just flattening out a little bit. You can see by the histogram there, but it's still darn good. And that says to me consolidation, Paul, at this point. I agree. When this market finally hits the iceberg, I'm not sure what's going to happen, because there will be so many people that are in these ETFs. The difference is that with an ETF, you can get out intraday. You can say, oh, I don't like it right now. Click. You click the button, you're out. That's also the problem, because sometimes it's very hard to get back in. Whereas a mutual fund, you have to wait for the end of the day, and then sometimes it's the next day that you actually get you could lose 2% just by timing it incorrectly, and then get back in, you've lost 2%, and you've made 6% altogether, so you've actually lost 4% plus the capital gain. No. It's getting tougher, and it's getting easier. Why is it getting easier? Because these monthly charts are still very strong. So, Paul, I think I've answered your question by saying I absolutely agree with you, but I think it's premature. I think when we get into the summer or the fall, if we are still rallying like this, then I'm going to say watch out. But at this point, I'm saying, yeah, be a little careful, but be prepared to buy the dips. If you want to short, you've got to be very nimble. Okay. I hope I helped you. But your point, well taken. I accept it. I just don't think it's timely for the big picture, which you seem to be implying. If you're not, then we're on the same page. Okay, now here's the other thing. GE, down 12 cents today. What's the big deal? It's at $30. The big deal is it's making this arch formation. And it's an arch formation in the daily and an arch formation in the weekly. And lo and behold, it's a huge arch formation in the monthly. But I still think it's in play as a candidate. Do I want to be long this? No. I would like to be long it on some kind of a pullback. I would consider that can have a really good rally, but it's not. I'm using it more as a benchmark and more as an indicator, and it's saying to me, yeah, I think a choppy period is coming up. Here we go. So you're talking about, let's go alphabetically, AXP, which is American Express, made a peak, a G. I just want to double check because I had a feeling that it might be an alternate count, but let me just double check. Is that 80.45? 80.45, 80.49, but then it extends, and that's a G. So American Express has just made a peak G daily top, and I'm calling it a sell signal. In another day or two, I would probably call this a sell mode. I'm just giving it G. I have no point. So it's a leg D in the weekly chart. I'm just going to do this. I'm anticipating, but I am going to put a down arrow, which implies American Express on a daily, not a weekly. Weekly hasn't given a single signal other than the doji candle of the week before, the inverted candle. This is that sunrise serenade. You remember, this is the candle that looks like inverted hammer, and it's gap down. So I'm thinking, yeah, pull back in American Express from 79s down to the 78, 77 area will be the first big test of support. Okay. And limited upside, 80.50 to 81.02 should be the strong resistance. American Express, I don't know if I'll do it alphabetically. Let's go to Bank of America. Bank of America, financial bank, peak E. I don't have any signal yet. I will be putting a down arrow if the MACD turns down, the stochastic goes from 85% below. So for all it's saying is high-level consolidation. It needed it, but it hasn't given the actual physical symbol in the Chapman wave methodology. My eye says the gap's going to be filled, and it's probably going to go from 25.14 right now with a high last week of 25.80 down to the 24.50s and maybe test 24 over the next 3-5 days. Let's go. JP Morgan. JPM. No, that went out of sequence. Made a peak F top right there. A gap up to an F is usually not a good thing. And I'm going to say I haven't got the signal yet of a down arrow, but everything points to this having a consolidation, trading at 91.60 down $1.20. I think that the 90.20 to the 89.50 area will be the very important support that I think it's going to go to. We'll finish these up in a moment. Meantime, Basil Chapman, Tiger Technicians Hour, Dow's down 72, S&P's down 12. I've got some real nice questions coming in.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. So this is a long-term chart that I showed my subscribers recently. This is the Dow going from the 2009 low. Look at this beautiful up channel. It nicked it twice. It didn't close below. And on the upside, it's just tested it every time, and it's testing it this month. And it's saying this technique that I developed a very long time ago called the Chapman Wave Inside Track Propellant Support Zone on the upside, or when you're rallying, and it's the lower channel. And on the upside, it would be the Chapman Wave Inside Track Repellent resistance area or sell zone. And we've gotten there. And it said, spectacular move, 3 beautiful months, 3 beautiful candles stuck in with one little tiny doji there in the middle. And we've got a doji so far this month. I think there has to be some kind, doesn't have to, there should be some kind of a consolidation. This is the third look, 1 to a D, second buy mode to a D, which extended. I could have given it an alternate count to another D and said, let's call it E to F to G. Pulls back, starts a brand new A to B to C to D. All right. Now, that low that was made in August of 2015 at 50,370 was not taken out on the decline at 50,450 in January of 2016. Some indices actually took it out and have started a brand new move. That's why they're only in C in the monthly. The Dow's already in D. I'm leaning towards C, meaning that the Dow's probably going to go to an E and then an F over the coming months. All right. That also says a technique that I like to use is that I like to do this. I like to say new parallel, and I put it somewhere in between, and I'll find really important support levels. I'll change the color. Now it's getting messy, but I'm just going to do this. I'm going to get rid of it for now. I'm just going to show it to you. So this dashed line right here is a support level, but first of all, you've got to see if I can grab the right one. Yeah. You see all the highs that I've picked out right there. The most number of highs or lows or candles, the wicks that we're looking at, says that the next level of very big support is 20,600 to 20,550s. So that's on my monthly basis. Is it a big deal? Hey, another 400 points down from here? What's the big deal? Look at the move we've had. So I'm expecting that there will be a consolidation to take place. Does it get deeper? That's the big question. I don't want to do much more work because the reason I brought this up is I was asked about the monthly on the, let me see if I can find it. All right, let me get out of this and I'm going to show you something else. For a recent save, let's just close this out, close workspace, save workspace, bring in the new one, and that's this one right, if I can find it. There we go. Okay. So here's the QQQ series. How frequent are breakouts from monthly chart channels? They are rare. When they happen, is this the one? Market top comparisons. Oh, I'm doing a whole study now. I can't even discuss it because it's in the studying process. Let me just see if this has the QQQs. I don't think this is the one. I think I use this purely. Yeah. All right, I can't find it. I'm not even going to look for it today. We've got plenty of time. Maybe tomorrow I will look. The QQQ series has a huge cup formation. It is one of the biggest cups you've ever seen, going from the high of 2000, of the year 2000, down to the low of 2009, and then to higher highs. And that is incredible. So let's hold off. Oh, I've got it right here. I've got my charts. I know my charts. There we go. QQQ series. There it is. So the question is on the monthly. That's a weekly. I want to go to monthly. Is this the one I want to look at? Yeah. Look at this. You see the U-shaped pattern with an H, successful H turning around, going up. We've broken out. But we've broken out with a spindle leg to the upside, like a thin wick. If you're looking at it, say if this was really a yearly chart, right? Not a monthly chart, then this would just be a skinny little leg up. Well, it says to me that the breakout in the Qs of 120.13 and we're at 130.36, I think that's going to be tested. I don't know if it'll be tested in this first quarter or in the second quarter, but I think it's going to be tested before the big move to the upside occurs. That's my thinking. But at this particular point, this is only leg C in the monthly chart. And it says the next pullback, we won't even know until I get a signal to say the monthly chart is making a peak. We haven't got a peak yet. So, okay, let's just leave it at that. I'll talk more about it later. Now, what I really want to do is say on the 120-minute chart, now we could have a move towards 20,980. Yep, 980 to start wave 4 in the Chapman wave methodology. I'm saying now, this is if leg 3 is finished and we don't take out the low of the day, which is Dow 20,912.11, then we could rally up. And as long as we go above 20,970.93, the gap down, high of today, we started at wave 4. All right? Brother, can you spare a peek? Yeah, that is excellent. That is really good. Good. Okay, back to our story. So I said GE, okay, the financials. So JP Morgan, a pullback. Goldman Sachs, I think ready for a pullback, but it hasn't given a major sign yet, except to say that the rally was on weaker MACD and a weaker stochastic. So this gap should get filled. This is the candle. I think it's headed for 249 high, 245.61 low from the 28th. I think we're going inside there. Okay, now let's go on. So as well, MA. MA is MasterCard. MasterCard just made a leg D and then a peak D. Is this not a technique and a half? I mean, I wish I was more like a machine and just looking at it and just only going with the technicals. You get the human emotion involved. It's very difficult sometimes. But yeah, this is now leg C in the weekly chart, unless there was an instant restart, and then it could be a leg D. I don't have to make any changes right now. We'll be looking at it deeper, but I'm calling it C for now, and it's definitely a D in the monthly chart. So MA, which is MasterCard, a little mature, but still doing fantastically. Visa made a peak D, pulling back, tight area of consolidation, but it's a leg D and a probable peak D in the monthly chart, a weekly chart. I'm watching this closely. My suspicion is that we're going to see, what was the chart we were looking at just the other day when we had a caller and we were looking at it? Ocular, O-R-C-A-R. I'll try to find it. You remember the chart I was looking at and I said, hey, wait a minute. This particular chart looks like it went slowly down in a down channel. No big deal. And then suddenly it pulled back very sharply. And I'm thinking there's that kind of momentum up here, that it's being lost and that we're starting to see chop to the downside. And maybe by the end of the week or even next week, suddenly there's the blanket gets put, the rug gets pulled and the market pulls back. And that's the move that we're going to monitor closely. Do we want to be buying on that very sharp pullback that's coming? Or is this the time to constantly keep our shorts in position and see what happens? And that's really the issue. So I've gone through the 5 Dow financials, and you can see each one of them, high-level consolidation, no big deal at this particular time. And yes, that's what I was saying to Tommy. Goldman Sachs, only a single leg A up in the monthly chart. Is that a single leg A failure, or is that going to be the harbinger of a move that goes B, C, and D? And then watch out. Oh, a lot to contemplate.
TFNN has just launched a special event in Tampa with Tom O'Brien taking place March 18th, sponsored by Nadex. Tom O'Brien will be presenting 2 workshops for a combined 2.5 hours of education, bisecting and dissecting his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System. March 18th kicks off with a continental breakfast as we get everyone checked in, and that is followed by 2 75-minute workshops with Tom O'Brien. The first workshop from 8:45 until 10 a.m. will cover quality volume, cause and effect, and ABC structures, and the second workshop from 10:15 until 11:30 a.m. will cover swing points, testing, and the Tiger Gartley. Tom will then wrap things up with a question and answer session, which will be followed by a Tiger Luncheon Social on the rooftop of the Westin Hotel. The best part is that it's all free, but you must register to attend. Visit the front page of TFNN.com for all the details and to sign up today, and we hope to see you in Tampa on March 18th. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Dow's down 84, S&P's down 13. So, this is what you're going to be getting on the 18th of March. Let me see if I can actually look at it. Yeah, this is Tom's book, Timing the Trade, How Price and Volume Move Markets, Tom O'Brien. And it's a wealth of information, just fabulous stuff. So please consider March the 18th, down in Florida, down Tampa. It should be a fantastic, let me see if I can put this down. I had it right. There you go. I think that it's going to be really worthwhile. Not only that, it's kind of fun to meet the people that you hear about and Tommy, see the different the members of our family here who sign in, who you'll know the aliases. You ask them, who are you in the den? Who are you? It's just kind of fun. So think about it. And not only that, it's a wealth of information you're going to be getting. Really. Free. Free. Okay. XOP I was asked about, and that is the S&P Spider oil and gas exploration. See, it's just trying to form some kind of a base right here. Stochastic is not good. It's a 14%, and it's really not showing any strength yet. MACD histogram is improving. That's a good sign. So here's the question. What was the XOP exploration? Oh, just a question. Oh, here we go. XOP, XOM, dollar into energy today. Should we be buying for trend reversal? So this is what I'm going to suggest, Julie. My weekly chart says we're in the area that should start some kind of attempt at a consolidation. My daily says, see, it's always good to open it out. See, if you open it out, you see the big picture. And the big picture says lower lows, lower highs, taking time rather than price. Yes, moving from the 44s down to 37, 7 points is a 12% correction. But that's not the issue. The issue is that this candle, these 2 candles right here, that's kind of your benchmark for support, 37, around about 37. And you're 37.83. So I'm going to suggest, Julie, that this is a difficult one in the sense that you see this pattern right here. It's not quite one of my favorite patterns. One of my favorite patterns is, let me just do the channel, is when you can have a much narrower move. You see, if I take it from the top there, that's good. I prefer if the actual channel is way narrower and they're much smaller and just kind of creeps down. What happens if you can time it right, you can get a fabulous sudden spike that takes out 6 to 12 or even more of the left side bars. So I'm just going to say this isn't quite the pattern. It has a characteristic of using time more than price. The MACD has just dropped precipitously more than the price. But I don't see anything yet. Now, I'm going to make the suggestion because you're watching this so closely every day, Julie. Why don't you do this? It might be a little early, but it's something that you follow closely. So if you want to nibble at 37.84, all you need to do, you might have to do it 2 times. The third time might be perfect. 37.62 is the low. 23.20. Let's call it 30 cents. A 1% risk. For a 1% risk, I think you've got the start of nibbling here. 38.32 is the 9-period moving average. If it bounces above, that's good, but really, it has to close, not bounce, but it has to close above 38.96, the high of the 1st of March. I'm thinking if it was me, I'd have patience to wait one more day. I'd rather be buying strength than weakness right here, because if it makes a leg B, the MACD will should turn up, and the stochastic should be going from 14% at least to 21 or 22%. So I'd be prepared to wait. But I think in your case, you watch it so closely. If you want to nibble here at 37.83, you've got yourself a stop at, say, 37.63. But if it climbs and closes at the high of the day today and has a good day tomorrow, then you've got yourself a nice little bounce percentage-wise. But I don't get carried away. All of this has to do with nibbling and adding small. This is not the time to be aggressive at all. But it's a good time to be getting a feel for how's the weekly going to hold. Is it going to just keep making red candles? Or is this the first time that it's going to try to tackle the 39.19 9-period exponential moving average? So keep in mind, cautious, just be careful. But that's the way you might want to play it. I just did AXPV with high interest rates. Should we short the credit card companies? You know, I was thinking about that over the weekend. My thinking is that I need proof that they are vulnerable, and I don't have proof yet either that the yields are breaking out, and I don't have proof that the credit card companies are actually breaking down. I'm going to hold off. Please ask me that question on Wednesday or Thursday. Okay. Next thing I was asked about Intel, INTC. Now, Intel's been lagging a lot. Where did that go? Intel, there it is. Intel's down 35 cents to 35.55. It's making the arch. I hope you people are getting to really appreciate over the years how often I've shown you this in my Chapman wave methodology, this arch formation. There are a bunch of rules that go with it, but keep it as simple as possible. If you take out the left side low, in this case for Intel, INTC trading at 35.56, if it takes out 34.84 and then bounces back inside, that's okay. If it closes below it, it has just 2 more days in which to close above the low of 34.84. If, in fact, it doesn't even get there, but it starts to go to 36.75, that's good action. I happen to think that the SMHs are vulnerable right here. And so that says to me, I'm looking more at Intel going down than going up. The stocks, could we get a correction like year 2000? Whoa, no, not in this environment, not yet. And not only that, my friend tells me that orders for semiconductors have just been amazing, and that Applied Material, Taiwan Semiconductor, see, Applied is still holding beautifully. TSM, I think, is that Taiwan? Yep, semi. That did pull back, but some of them are really seeing orders expand. And he says it's very interesting because the ones that are doing well are doing very well, and the ones who are lagging, he's not too sure about. So this is going to be very interesting to watch. But I think semis are in a digestive phase. And then the final question was, I think there was one in the den here. By Friday, we make peak C and IWM weekly, Basil. So next Monday, we should make another attempt at another high. Whoa. Let me just see that because it was C. Yeah, peak C so far in the IWM, which is the Russell 2000. Peak F with a down arrow at E and then an inverted hat, an inverted V, high, and peak F. So I have a down arrow essentially. We're in a sell mode in the IWM, the Russell 2000. The weekly is in nothing. It's still not giving me, it's giving me technical signals to say it's starting to weaken, but the price is held. So I'm saying that this rectangle formation, I think that continues for a while. To put it simply, I believe that any market decline from here, starting from the high of the first, is going to go into the category of high-level consolidation. And that if there's a rotation going on, if the IBB is able to hold, if there are just certain sectors that don't break down, then what we're looking at is what I say, high level, the monthly, yes, IWM, weekly and monthly, leg C at this particular point. And the MACD is good. Stochastic's not that great in the daily chart of the IWM. So I hope I answered that question. One more segment to go. I tell you what I want to do in the next segment. I want to show, how can I put this? I want to show a relationship of the Investors Business Daily top stocks, okay, and where we are right now. Why I'm a little cautious because most of them are doing easy. I'll be right back.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi everyone, Basil Chapman. So let's just do this quickly. TYX. The TYX is the 30-year Treasury bond yield in white. You see this high-level consolidation? It could even be a cup formation. If it takes out 31.97, if it goes to the 32s, watch out. Yields are coming, bonds are coming down, yields are going higher, and we've changed the modus operandi. That's the same application to the 10-year brown. This is the TNX, and the cyan-colored 5-year. Now, what's really important about this is that you see we've had high-level consolidations before, but they've broken down because the trend was the Japanization of our bond yields. So we don't know yet whether that's going to occur. I can just tell you this: if the market very quickly drops 1,000 points in the Dow, 1,200 points in the 120 points in the S&P, I think that the Fed will refrain from doing anything with the yields. So we're going to be watching that one very closely. So that's the level to watch. It's at 3103, 3.103%. Takes out on the downside 29.50, 29.40. The Japanization of our bond yields continues. So Sandip had a quick question. You had You were going to talk about, I did a whole thing on AU. Didn't I? I'm sure I did. Yes, I think I did it the other day. AU, I did a whole, there it is. The Chapman Wave Unconventional Flat Base Restart. Okay, no time for it now. So can you talk about AL today for long? I would wait. Don't do anything yet. No. I said the other day, AU, which is Anglo Gold, Ashanti, don't go long yet. Wait, you want to see a test at 10:09, 950s to the 930s. That's the test that you want to see. You might not get there, but you have to have patience. Now, so that's that. I hope I covered it. Let me just do this. NetEase, NTEs. NetEase made a peak G, unusual peak G top in the daily, and it's consolidating. Let's just go through these. If I can see it. NVIDIA. Made a peak D way back. It's now in a leg D to the downside. I'm not sure, but I think NVIDIA has made what I term a hat-trick top, meaning it's seen its all-time high for quite a while to come, because the monthly chart is going to take a breather. That means the daily and the weekly obviously will be taking a breather. Watch out. NVIDIA is going to be the clue. If NVIDIA holds the 90 to 85 support area and then suddenly rebounds and gets to 105, I might have to rethink it. But I'm not rethinking it right now. CGNX. These are just on the top. IBD top 10. Leg F to the upside, recycled, leg E to, this is amazing. This is Cognex Core Modular Vision Systems. Man, I wish I could see 2020 with this, because it is you could have bought it anywhere in the 40s, 50s, 60s, 70s, and now it's at 80.71. Getting a little toppy, but you could have said that for months. AE, I can't even see what it is. AE, what is that? Have I got time? Yes, I have. AERS. AEIS or RS? No, it's not AERS. It's AE. Advanced Energy. AEIS. AEIS. Just the light is hitting it badly. Yeah, so this is a brand new, goes A, B, C, double top, goes to a D. In a D, in the daily, weekly is E, F, F may be a G. It's starting to lose momentum. So it's not breaking down, but it's losing upside momentum. Thor, this is a fantastic company. Look at this. Thor, A, B, C, D, E, recycle, F/B, G/C. Unbelievable. It's looking fantastic. Thor, industrials, recreational vehicles. Boy, people are riding recreational vehicles. Folks, have a great day. I'll be back tomorrow. Check out my opening call. I hope you'll find it very elucidating and hopefully profitable. I'll be back tomorrow.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.